We wait for a few people to get into the live stream. I thought I would tell you a little bit about what I got going on right now because I'm headed to Miami for the Rebel Capitalist Live event. Rebel Capitalist Live. Gonna go down there and hang out with our man George Gammon and all the great speakers: Doug Casey, Peter Schiff, Brent Johnson, Lynette Zhang. Gosh, so many good. Jeff Snyder, Robert Kiyosaki. So many awesome people there. Now, oops, sorry, just kind of getting my camera set up there a little bit. Went to go fly out of Portland this morning and actually realized as we were about ready to go through check-in, go through the security, that we were not going to make our connecting flight. And we knew it. We could see it right away. So we go to see what we can do about getting an additional flight or make a flight to Miami, and they're telling us there's no flights. You're not getting to Miami. But my sister, who is really good at traveling, she gets to talking and finds two flights, two of them, from Portland to Miami on a different air carrier altogether. But we were able to managed to get those two flights. So the last two flights out of Portland to Miami, we were able to get them. So we're now switching our plans. Instead of flying to Miami today, we will be flying to Miami tomorrow. And instead of going to Texas for our transfer, we'll be transferring or switching planes in Denver instead. So anyway, we're gonna make it. We're gonna make it to the Rebel Capitalist Live event, and oh boy, what a trip already. We haven't even gotten there. We haven't even barely gotten started. All right, so let's talk a little bit about the bullwhip effect. Now, a lot of people want to know what the bullwhip effect is. And the easiest way to kind of explain bullwhip effect was from an actual situation that I had gone through when I was working my retail job. So a lot of you know that I work retail at a lumber yard. And I pretty much stand at a till all day when I ring up customers. So I'm not like, some high-end salesman who's doing like, $1 million packages or something like that. I literally stand at a till and I ring customers up. But the bullwhip effect happens when there is obscurities inside of the supply chain from both the retailers all the way up to the manufacturers. And a lot of times what you end up seeing is that what happens as far as the orders go at the bottom of the line transfer and get magnified as they move up through the supply chain all the way to the manufacturers. So by the time the manufacturers are actually seeing the orders, it is much bigger than what is actually out there or what's out there for demand. So the example that I have used was with a plumbing fitting. And so with this plumbing fitting, it's a Fernco, and it joins generally two different types of pipes. So say you have like a plastic pipe and a cast iron pipe, and you want to join these two together. There's this rubber Fernco fitting is what they refer to it as. And it has two like metal hose clamps on each end of it. It's pretty simple, but it's a really easy piece for joining these two pieces of pipe together. And when it comes up in short demand, these people who do like underground or do like excavation work or septic systems, this is like a critical component to finishing off this project or to joining in these two pieces of pipe. And when they come up in short supply, it's like, what in the world is going on here? I mean, these are just really cheap parts and there should never be a short supply of these things. But the people who need them, when they can't get them, well, they can't finish their job. So when they did come into supply, this is what happened, is that when they did come in, the customers who buy these things on a regular basis saw that we had them on the shelf and bought more than what they needed. They were like, oh man, you finally got them, cool. And so they bought like 4 of them. And I was like, well, don't you only need like 1? And they were like, yeah, but we came up short before and I'm not gonna wait another week to finish this job. I'm buying them all right now. And so he buys them up. Well, the next guy who comes in to buy them doesn't have them. Well, he'll do the same thing. So when they finally do come on the shelf, he buys up more than what he needs. Well, unless you are the person who is actually selling those things, the computer algorithms and the people upline who see these orders coming in, they don't quite know what's going on there. They just know that they just keep running out of stock and that they need to order it. And when typically you would may have sold like 2 or 3 of them in a week, you're selling 8 or 9 of them because these people are in a panic buy. They think they won't be able to get it, and so they're jumping into the game so they can hurry up and get this stuff before they have a chance to not get it, right? So this is where like the bullwhip effect really starts taking place, because as this algorithm starts beefing up the order saying, hey, we need more of these things on the shelf, if more stores start doing that, then the distribution network starts seeing more orders. They start bringing it up line to the manufacturers and the other the distributors and the other manufacturers out there, and then pretty soon you have an oversupply of these particular Fernco fittings now flowing through the system. And that's what happened. All of a sudden, boom, now we got a big supply of it, and we stock a lot more on the shelf than we ever did because the computer algorithm believed that there was a higher demand for it than there really was. And that's really how the bullwhip effect has started to increase the amount of inventory coming into this country. Now take a look at the description, or in the description I leave a link to a FreightWaves article that's talking just about this. And there is a huge oversupply of glut of material that is now, like inventory stuff now, is now coming into this country. And I thought it was pretty interesting that in that article, Samsung has told their upline, like the people who do all the manufacturing for their stuff, to cut their production in half. That is huge. Samsung was like, what was it, the 7th largest company to import stuff into the country, and they're telling their suppliers to cut their stuff in half. So that's a huge thing that's happening right now, and it's something that I feel that as we continue going into the future, that we are going to find that that's going to start putting the price inflation down. It's going to start tampering that stuff down. Everybody's going to want to blame it or point to the Fed and say, look, the raising of interest rates is doing it. But I said it a long time ago that it was going to be the rising of inventory levels that was going to be more of the going to stop the inflation from continuing to rise more than it would be coming from the Federal Reserve and the lifting of interest rates. But everybody's going to argue with me about it. But here we are. It's happening. And I said it was going to happen at the same time. The Fed is going to be lifting interest rates at the same time they freed up the mandates, freed up the all the restrictions that were going on, and the supply is going to start flowing into this country, and that's what's really going to bring inflation down. And we're starting to see it happen now. All right, so 65 of you have liked the video. There's 314 people watching. Please go and like the video right now. I never ask you guys to like the video. I figured that if you really enjoy the video, you would like it. But when we're doing these live streams, if you hit the like button, it starts spreading the video around. More people get into the video, we get more people chatting, and it makes it a lot more fun. So I really appreciate it if you hit the like button while you watch these live streams. And then hit the like button if you do like the videos, because it really does let me know that I'm doing a good job. So I appreciate it when you do. But you know that I never ask for you guys to like or subscribe. I figure that if you truly like the video and you want to subscribe, you'll just do it on your own. You don't need me to ask. So. Is it okay? Lord Humongous, one of my favorite viewers here. Lord Humongous, what do you say? Is that like transitory? I mean, I'm the one who said it a long time ago. Inflation was going to be transitory. Everybody laughed at me, so I stopped saying it. But yet here we are, right? All right. Are you going to visit Denver downtown? I'm not sure what it is that we have going on. We only have, I think, about 50 minutes to switch planes in Denver, so I don't think I'm going to have a whole lot of time to be hanging out. So no, probably not. Do you think TV, computers, electronics will drop in price? Yes, I think they're going to drop substantially in price. I think anything that is going to be a luxury item is going to drop dramatically. Anything that is a necessity, food, energy, stuff like that, that's going to get real expensive. Things that are discretionary, computers, TVs, furniture, stuff like that, that's all going to fall. All right, Lord Humongous, you're in Denver? Right on. Man, I would love to meet you. All right, let's see here. Do you stack BTC? Yes, I do. I haven't talked a whole lot about BTC just because the price dropped so dramatically, and I just really wanted to see how far down it went before I let people know that I am going to start buying into Bitcoin again. But I never buy a whole lot. I always dollar cost average into Bitcoin, $50, $100 maybe. I was doing $50 a week for an entire year. It did quite well. Obviously now with the Bitcoin as far down as it is, didn't work out so well in the end. I mean, as far as like I am underwater as far as that purchase goes, but I made the conscious decision that I was like, okay, I can sell it out right now. Do you want to sell it, or are you just going to hold on to the Bitcoin? I decided to hold on to the Bitcoin. I didn't necessarily need the money, and that's really like a small chunk of the actual Bitcoin, that dollar cost averaging experiment that I did for a year. When I add that into all the rest of the Bitcoin that I own, I am still way up on my Bitcoin because I've been buying since Coinbase allowed people to start making accounts. I had like a Coinbase account like 6 months after they started up. So I've been buying Bitcoin a very long time. So I have no problems buying it. And I would suggest at some point people should get their hands on some Bitcoin, learn how to use it. It's going to become something that is going to be it's not going away. That's the only thing I can say, right? It's not going away. All right. People moving to altcoins. Yeah, I mean, I do buy some altcoins, but just to have some of them. I don't really have a whole lot of faith in a lot of the altcoins. Some of them are going to do well. I mean, there's a lot of good. Coinbase was going bankrupt. Yeah, it is. So there's a lot of good coins out there that are probably going to do quite well. Most of them are probably just end up not going to be doing anything. They're probably just going to end up failing. So, but I just assume that some of them are going to do well. Sounds like bullshit. Stop shilling Bitcoin. Okay, well, go do what you want, man. I'm not shilling Bitcoin, man. I mean, buy Bitcoin if you want. If you don't, you don't, man. I never give people investment advice. I'm telling you what I'm doing, all right? So don't buy Bitcoin, bro, all right? Hyperinflation. Let's see here. I am waiting for Bitcoin to drop to the current silver price, then I will get in. Well, that could happen. I mean, I wouldn't be surprised if it falls even down to 10,000. I mean, shit, it can go, right? I'd rather buy lumber. Yeah. Lumber futures right now down at 600 per thousand. That's pretty low. I mean, I can't imagine that lumber is going to drop down into the 400 per thousand range. Even down at 550 per thousand, I thought that was pretty low considering how high it has been and how big of a demand that would be when it gets down to the 500 per thousand. So even at 600, if you could find a way to invest in futures, I would think that this would be a fairly decent opportunity for it. But again, I don't give investment advice, so you do what you choose. Let's see here. Infamous NYC, thank you very much for the $5 super chat. Went to the Ford dealer today to look for a pickup. Ordering is closed till mid-August due to the backlog. And he said some waiting 6 to 8 months for cars. Crazy. Yeah, and you're probably going to continue to see that with the car inventories. That's not going to be easily resupplied like the rest of the stuff that's out there, like TVs and furniture and all that other things. Those are going to come in a lot easier than it is manufacturing a car. And considering like how much supply chain shortages there are to actually assembling a car and everything that went into it, I can imagine that it's probably going to be like a year or more before you start seeing like more inventory for vehicles. The only thing that would really kind of maybe help it along is if we start seeing higher interest rates, and then people, and I hate to say it, but if you start seeing a lot more repos, and which from what I understand is starting to occur. So if you start seeing more repos and you see higher interest rates at the same time, I can only assume that at some point you're going to start seeing higher levels of inventories because of that. Bullish Paul McCarthy, $2. Thank you very much for the $2. All right. So are you bullish or bearish on what? You gotta, I mean, on what part, let's see here. Charlie Sheen. That's funny. All right. 99 Ford Ranger, 230,000 miles strong. Yeah, I had a 95 Ford Ranger that I drove for over 320,000 miles. And on the original clutch. That was what was really incredible. I ended up getting rid of that because the clutch did go out on it, and I ended up trading it for like a little Nissan pickup that I drove for like another 2 years or something. So that Ford Ranger actually worked out pretty well for me. It was a pretty good truck. I really enjoyed it. All right, let's see here. The Fed needs to raise rates more, but then it puts pressure on our national debt. Obviously, we've been printing more in recent years. I don't see that stopping if debt makes up more of our budget. The Fed does need to raise rates, and that has always been the thing. Like people say the Fed will never be able to raise rates because the United States government wouldn't be able to afford the higher payments that would come from that. Something interesting that's happening right now is that the Federal Reserve is pushing those rates up without doing anything. They're just jawboning the rates higher. And so they're actually pushing it on purpose. Now, whether or not the government is going to be able to afford those higher payments, well, that's if they continue to take out higher interests or higher debts, right? Like they continue to go into deficit spending. But what if they actually do back off on their spending? What if they do start getting tax revenues, lifting up tax revenues and stuff like that? There's never like just a situation in which that they won't be able. Oops, phone fail. There won't be a situation in which they just can't, right? That they just can't do the payments. Even Alan Greenspan said that there's no way that the United States will fail to make a payment because they have a printing press to do it. Now, whether or not the Federal Reserve actually fires up that printing press is another story. I honestly think that the Federal Reserve is going to be able to unwind their balance sheet in a way that is not as dramatic as people will think it's going to be, especially like when it comes to like the mortgage-backed securities. I mean, that one's like more of the concern I think that people would have individually, concerned to like with the housing market. And so we kind of talked about that, like what the Federal Reserve is doing with the mortgage market. And if you think about like how much issuance there's coming out there, because it's the same thing coming from the Treasury. It depends on how much the Treasury is going to issue. And it depends on how many mortgage-backed securities are going to come into existence. So you think about it, if there's higher interest rates, that's less people going to be taking out mortgages. That's also less people refinancing their mortgages. And so if there's less people taking out mortgages and less people refinancing mortgages, that's less mortgages out there to accumulate into a mortgage-backed security. And believe it or not, there are people who do want to buy mortgage-backed securities. And if there's not a supply of them like there once was, then the Federal Reserve can say, hey, we have a supply of them. You guys want to buy some? Well, the same thing with the U.S. Treasuries. If the U.S. Treasury doesn't issue out as many bonds or notes or anything, there is a supplier out there, the Federal Reserve. They're trying to unwind their balance sheet. And there you go. You can start loading up the investors or pension funds or whoever wants these bonds. Now they can get a supply of them. So if you do it just right, then maybe they could unwind that balance sheet and not drive the interest rates on the U.S. Treasuries up as high as what people are anticipating them doing. It's like, I mean, it's whether or not it happens. I mean, it's just a possibility out there. Thank you so much, Bullish McCarthy, for the $5. XRP Ripple is obviously the future of money. Hired Rosie, thanks for the insight. Well, there's a lot of people who believe in XRP. Now, again, I'm not so set on it. I mean, a lot of people are convinced. They think that it's going to be the way that these banks do their international transactions and whatnot. But I can't necessarily say that it's not going to happen, but it just doesn't feel, I don't feel it, right? I don't see it happening. All right, let's see here. Lord Humongous, that to the other precious metals. Yeah, well, it's funny because I was talking with an Uber driver earlier today, and by the way, if you're watching, hey man, what's happening? And we were talking about silver, and I still like, it's funny because I called the precious metals, when you buy in precious metals, you're intending on selling it to the greater fool. That's not when you're buying it. That's when you're investing with it, right? I have always looked at precious metals, not always. I now look at precious metals as an insurance policy. And the idea that you are going to sell it in the future for a profit, that was something that I had in my head a long time ago. The only problem with it is that over the 15 years that I have been buying silver, there's very few opportunities that I have ever had to sell my silver for a profit. But here's the thing, the silver has saved me many times. And now the greatest story that I have with silver is when I was able to trade a bunch of it for a car. Now I was broke, had no money, I was living out in the country, and I had no way to get to work. And I called up my buddy and I said, hey man, you still have that Tahoe for sale? And he says, you know it. And I said, dude, will you trade silver for it? Will you take some silver from me? He says, yeah, absolutely, I'll take silver for it. I said, can you please drive it up here? So he drove it over to my house. I handed over 165 ounces of silver, and he signed the title over to me. And I thought, dang, man, that is pretty cool. And since then, I have always looked at silver as my insurance policy because that's what it is to me. And I will never find myself thinking that, man, I hope this thing is going to go to $1,000 an ounce and I'm going to be some filthy rich millionaire or something. That wouldn't even get me there, but I'll have like hundreds of thousands of dollars or something off my silver. And I just don't think that way anymore. I just don't see it. I look at it as the insurance policy like it should be. All right, hard assets, yeah. Let's see here. Get ready for the CBDC push, folks. You will own nothing and be happy. Yeah, there will be a push to the central bank digital currencies at some point, and I think that it's probably going to come with the next crisis of some sort, because really right now the Federal Reserve is going to be pushing their interest rates as high as they can. in an attempt to try and get their ammunition back. And now the ammunition is that Fed funds rate and dropping of it. Now, typically during a recession, the Federal Reserve would want to drop interest rates around 5% to try and stimulate the economy, get people out there borrowing money to go on vacations and buy houses and cars and stuff like that. But when the Fed funds level, if it's not but 2%, dropping 2% or even 2.5% doesn't really stimulate the economy. So they have to go into other means of trying to stimulate the economy. Now, I'm not going to say lucky for the Federal Reserve because the pandemic was horrible for a lot of people, but it was lucky for the Federal Reserve that they had the pandemic so that they could actually go into this quantitative easing. Otherwise, they wouldn't really have had an excuse to try and deal with the recession that was going to come regardless of the pandemic. We were reporting on all the signs that were leading up to a recession were well in place at the end of 2019. So when 2020 came, a lot of us were prepared for the recession, but the pandemic pretty much covered it all up. I mean, there was a recession. It was the steepest, quickest recession in history or something like that. But that recession gave the Federal Reserve and the Treasury all the reasons and excuses and everything that they needed in order to go into the quantitative easing in order to save the economy that was going to crash anyway. So they were quite fortunate to have the pandemic in order to create the unusual and exigent circumstance so that they could have the special purpose vehicles to bail out every corner of the financial market, or at least create the credible threat that they were going to be participating in some parts of the market, like the corporate debt market, and that forced the investors, the market, to go into that corporate debt before the Federal Reserve ever did anything. And that was something we just recently talked about in a video, the credible threat theories, which isn't really a theory. I mean, it's something that the Federal Reserve says that they're doing. So anyway, I think I forgot to say something in there, but anyway, what else? Gosh, there's a lot of you. 737 of you guys. My goodness. Wow, what's that name? Django Geek. Thank you for the $2. What do you think about the bear market in oil stocks? I saw that coming. Now, a lot of people ask me, isn't the high oil prices going to cause inflation? Yeah, it does at first because the input costs going into everything, the shipping costs and all that, it drives the prices of everything up. But the only problem with high oil prices is that it also puts a slowdown on consumer demand because people can't afford to go out there and spend their money, or even afford to drive to go spend their money. So higher oil prices, although have an initial inflationary scenario to them, it's actually in the long run is a very deflationary event. And I actually talked about that a little bit on Instagram. I haven't been playing around on Instagram much, but there's a nice little video on there that we were talking about that exact scenario. So, yeah, I think high oil prices is going to be deflationary in the long run. My 95 Chevy S10 has 760,000 miles original motor and transmission. My gosh, that's the best I've heard of. That's 760,000. That's incredible, man. You must do really good maintenance on your vehicles. Everybody ready for the next pandemic? Yeah, I mean, is it going to be a pandemic? Honestly, I think it's going to be a sovereign debt crisis. I think it's going to be a corporate debt crisis that leads into a sovereign debt crisis, and everybody's going to be panicking and losing everything they have, and the central banks of the world are going to come together and say, here you go, here's your central bank digital currency, everybody download the app and get your free money, and everybody will do it because everybody loves free money. Let's see here. Event 201. What's that? I don't know that one. Sorry, guys. It's going to be a war. Gosh, I hope not. I try not to think that it's going to be a war, but that's usually how it. I mean, if you debase the currency, eventually they all lead to war. So, yeah. I mean, it very well could end up in a war, and I hope not. I really do hope they avoid ground wars or a bunch of killings and fighting and stuff like that. It's not something that I look forward to. That's for sure. Okay. Macro strategy is hurting investing in Bitcoin and crypto. They went from being valued at 12 billion to 1.5 billion. Yeah, I mean, that's not the first time. People, I mean, the cryptocurrencies are incredibly volatile. This isn't the first time they've dropped so dramatically. I mean, it's the nature of the beast. That's why I dollar cost average into everything, because you can never time it. Like, you're never going to be able to say, like, man, we've hit the top or we've hit the bottom on anything. Like, some people might be able to do it. I've never been very good at it. But buying in when things are low, like unloved, unappreciated, that's when you get it. That's why, like, silver is a great place to go to, because it just doesn't move, right? And it has very little downside risk. That's awesome, man. That's like the greatest place to save, right? I'm sorry, I meant scamdemic. Yeah, all right. Yeah, let's see here. Beans and rice, rice and beans, and maybe taters on the side. um, I'm glad regular folks like you are raising the alarm bell. You can tell when people are sincere, and you got no investment in doing this for us. So thanks for all you do. Yeah, that's one of the things. Like, I really enjoy studying economics. Like, it is something that is very deep, and like, I just can't help it. Somebody just mentions one little thing about something that's happening inside of a market or whatever, and I just immediately engage in it. Like, I just can't help myself. So if you ever wanted to talk to me, you just mentioned something about economics, and I'm in it, right? I just love the topic. But I don't have anything to sell. Like, I don't have a program to sell. I don't have anything to sell. I don't even have a book to sell. And I need to write a book so I can have something to sell you guys, And that way, it's just more than just being entertaining out here. I can give you something to buy. But I don't have anything for sale. I just do this for the fun of it. And the ad revenue and the super chats are a lot of fun. I mean, it's a nice incentive to come out here and do this, but I really feel I'd probably be doing it anyway. All right, we are at war right now. The world calls it a war. Local news and feds don't. Fake news. Yeah, you think about it, like the war on drugs, right? I mean, since when do you get to declare a war on the American people? Right? I always wondered about that one, like, fighting a war. Yeah, war on drugs, failed battle. Okay, let's see here. Bitcoin will collapse to $300, then 30. All right, I'm going to be all over $30. How do you explain gold prices increases in other major currencies like Japanese yen 30%, but not in the US? Great question, isn't it? So why don't you just sell your gold in Japanese yen instead? Would you rather have Japanese yen or US dollars? Right? Kind of makes you wonder, doesn't it? The markets are incredibly manipulated. There is no way that the gold price and silver price would be where they are if it wasn't for the massive manipulation that happens within them. So you can explain it away with conspiracy theories or whatever, but when you think about it, when it comes down to it, what would you rather have when you sell your gold? Would you rather have dollars, or would you rather have Japanese yen? All right. My parents had 12% mortgage, and I have a 3% mortgage. I imagine a healthy mortgage rate is somewhere in the middle, around 6%. Yeah, I don't know what a healthy mortgage rate would be, but I would imagine that a healthy mortgage rate would be something that would be established by the free market. When the Federal Reserve participates in the mortgage market with the buying of mortgage-backed securities, then that doesn't really give a whole lot of room for the free market to find that price equality or stability or performance. I don't know. There's a name for it. I'm losing it right now, but that's really where it could be found. Like, if the Federal Reserve was to say that they are going to dump all their mortgage-backed securities in the next 3 months, then you would see everybody else dumping their mortgage-backed securities as well. But it would eventually find a point that the investors would be like, no, man, this price is too low and those yields are too good and I'm in it, right? At that point, that's the free market kicking in. Whatever that interest rate is, that would probably be the real interest rate. Whenever the Federal Reserve starts participating in it, it's dropping it from that real free market interest rate. Companies who invest in Russia lost a lot. Yeah. You're taking on risk anytime you ever put investments towards anything. And when you start investing into countries like Russia or China, then you can expect that you're probably going to end up taking a loss from that. You think about like some of the games they're playing with these Russian bonds and how, the investors were going to get paid but not going to get paid, and then if they didn't get paid, that the credit default swaps weren't, like, this was out of their scope of obligations, because it wasn't that they couldn't get paid, it was that they were being sanctioned against, and that they had these assets frozen, and because they were frozen assets, then the insurance policies didn't have to pay. It was like this weird game that was being played back and forth, and the investors are stuck in the middle going, we took on risk, and now what do we get for it? Nothing. So how much risk are those investors really going to be taking on going into the future? You have to really ask that. And I fear that putting money towards debt, like taking on risk by loaning people money, like buying bonds or doing something like that, is probably not going to be very appealing going into the future. And that's where like things like hard assets, land, those type of investments are probably going to do much better, commodity-based stuff. All right. Rubles are better than what? All right. Food and water will be like gold, precious later in time. Yeah. That food shortage, it's not going to last forever. See, the reason there's going to be, like, a lot of people ask me, I was just like, why is there so much food shortages? And you can come up with all kinds of excuses and stuff, but really, I have to take it back to the pandemic. Do you remember when they were like burying crops and like killing off herds and stuff like that because they couldn't get them to like the slaughterhouses, and they couldn't get it into the distribution lines and stuff? All these farmers were taking a beating bad. Well, I tell you, if you had a whole bunch of crop that you had grown, your harvest, and you had to throw it all away, how much are you really going to invest the next year? Right? You had to throw all your crop away, or a big chunk of it. The next year, you're probably going to do just about the bare minimum of what you can get away with, because you didn't have a whole lot of profit from the year before. So that's going to leave a shortage of food. The price is going to skyrocket. The farmers are going to love that idea, and they're going to jump in to trying to produce as much as they can to take advantage of those high prices. And you're going to have something very similar to the bullwhip effect happening with food. So you're going to find food shortages, prices are going to skyrocket, but then the farmers are going to start supplying, trying to take advantage of those high prices, and then you're going to see the exact opposite happen, and farmers are going to go out of business. And this is going to take years. I mean, this isn't going to happen over the course of like the next few weeks or months. This is going to be like long term. This is going to take forever to go through. People are going to be like, man, the pain of this is just unreal. It's never ending, and it's going to be that way. It's going to feel that way for a long time. I would rather have silver dollars. I tell you, this is what I pack around all day. Right? See, I got my stuff here. Everywhere I go, I carry silver. Everywhere. I love this stuff. And I carry it with me just in case I run out of money. I figure that if I have a silver, a piece of silver with me, then I might be able to trade it for some fuel or food or something. So I always carry silver with me just in case. And it's my backup. It's my insurance policy. And this is kind of a fun one. Let me show you this piece. It's called the Pluck Taxpayer. It has this chicken on there. You see that? That's pretty funny, huh? All right, let's get down to another question here. Did I miss a super chat? I see that. Where is that thing? Maybe it's down below here. Sorry, man, if I'm missing your super chat. Oh, there they are. Okay. Sorry, guys. Whoa, 40 bucks. Gosh, I got a horrible stand here. 40 bucks from Sidekick Cato. Thank you very much. Wow, never seen you out of the car. Yeah, I'm sitting in a hotel room in Portland right now. Unfortunately, the Corolla is back in Astoria. So I've never seen you out of the car. What a change of scenery. I was about to head to bed, but it looks like I'm going to sit up here with you for a little while more. Hey, right on. I really appreciate it. Yeah, I'm probably going to hang out for maybe a half hour or so, maybe a little longer, but I got to go to bed, get up early, like 4 to catch this flight to Denver and then on to Miami. But thank you very, very much for that 40 bucks. That is very nice of you. Very kind. Dumb Money Media, thank you for the $5. When you see George, tell him Dumb Money Media said hi. I am in the process of making a bunch of vids I think he's going to like about the WEF. All right, that's the World Economic Forum for those of you who didn't know what WEF is. Well, that's very cool, man. Yeah, I hope to see George tomorrow, and I will certainly let him know that you said hi and that you were on the live stream today. Thank you for the $5. It's very nice. All right. How do you buy your precious metals? I buy my precious metals from my local coin dealer. That's generally where I like to go. Clatsop Coin, if you're ever in Astoria, go down and see Scott at Clatsop Coin. Let him know the Uneducated Economist sent you. But that's generally where I go to get my silver is through the local coin dealers. A lot of times you can find some pretty good deals online at some of the online dealers. There's plenty of them out there. I'm sure the comment section will fill up with plenty of places of where those guys pick up their silver. So there's some really good deals online that you can get. The thing I like about going to my local dealer is that I don't have to wait for it. It doesn't have to come in the mail. I don't have to worry about it. It's money handed over and I get my silver right now. So it's in hand right away. And that's what I like about going down to the local coin dealer. So that's how I do it. You can also check out some of the pawn shops. A lot of times pawn shops will sell, silver and gold at a fairly decent price. I picked up a 10th ounce gold coin from my local pawn shop, I don't know, a couple of years ago, and he gave me a pretty good deal on it. At least I thought. I can't remember exactly what it was. I just remember like the premium over the spot price was like pretty minimal. I mean, I was like, well, geez, if you're gonna do that, then yeah, I have to buy it. So pawn shops are another place that you can go to. And then, another way you can do it is like really you can check around this locally. If you put the word out there, at least it works for me. I'm in a smaller area. My Astoria has 10,000 people. There's 30,000 people in the whole county. So if you start putting it out there that you're interested in silver and you want to buy silver bullion and stuff, you would be amazed on how many people out there would be like, oh yeah, I have some silver, I'll sell you. And so you can actually like find just people in your community who would be willing to sell you silver if you just put the word out there. So, all right, let's get down to the bottom. Oh, there was another one. Hey, thank you, Gus, for the $10. My parents give me an allowance and let me live with them rent free. I buy all the household. I buy and buy and let me live with them and buy all the household goods. I put all of my money in collectible toys and comics. I also enjoy casino games, smoking, and drinking. Well, Gus, it sounds like you have a pretty mellow life, man. A lot of the rest of us are in the rat race, so I don't know, man. Congratulations! Thank you very much for the $10. I hope you enjoy your life the way you live it there, man. That seems like a pretty easy one. All right, congrats. Oops, what did I say? Congrats and best of luck on your presentation. Yeah, I don't know if I'm actually going to do a presentation. It was just that he asked me if I could prepare one, so I'm thinking that in case somebody else doesn't make it to the convention, that he might be able to call on me to get up on stage and do a speaking. I have no idea what it is that I would talk about, but I get up there and give him hell. I mean, I'll do my best. And I'd imagine that once I get to talking, I'll probably just won't shut up for the whole hour, But, yeah, I'm looking forward to it. I have no idea what I would say up there. His parents give him an allowance. Yeah, the F. Yeah, I was like, man, that one part got me too. I'm like, I hope I didn't get all of his allowance, the $10. But if you did give me your whole allowance, I appreciate it, man. Thank you. Why is the Russian ruble rising so much? Yeah, well, when you force people to buy your commodity in your local currency, you're going to cause a false demand for it. So the US dollar is still the cleanest shirt in the dirty laundry basket and will be for a long time. John Jones, I agree with you. I totally agree with you. It won't be forever, but it is today and it will be tomorrow. And it doesn't take much to look around to see how much debt there is issued in US dollars and how much demand there is for US dollars outside of this country. It only seems that the only people who don't like the United States dollar is the United States. Everybody else wants it. So, all right. Is it a good time to buy a home right now? Is it a good time to buy a home or to take a mortgage out on a home? I mean, those are kind of two different things to think about. I kind of think about how expensive everything has moved up. That is very difficult to say, yeah, now is a good time to buy a house, right? But what's even more difficult to say is now is a good time is to take out a mortgage on an expensive home. That is even harder to say yes to, because that really seems elevated to me. When the Federal Reserve, like this is something we talked about just recently, the Federal Reserve said that they are using their forward guidance to try and push the markets to behave in a way that are ready for them to do what it is that they say they're going to do. So right now, the Federal Reserve has pretty much forced the markets to price in additional rate hikes. So the Fed has their Fed level here. The markets have priced in interest rates to here. Well, what if the Fed doesn't raise the interest rates? Then the markets wouldn't be up here. They would be down here somewhere or somewhere in between. So right now, the markets are elevated on the idea that the Federal Reserve is going to be lifting interest rates into the future. So they're elevated up higher than what they should be. Is it a good time to buy? In my opinion, no, it's not. Because of those reasons. But again, I don't give investment advice, and I certainly don't give home buying advice, because I didn't want to buy the house that I did, and I was forced into it. Since I've purchased it, I'm actually pretty happy with the position that I'm in with my house. So I have a cheap interest rate on it, and the value of the home has like gone up dramatically since I purchased it, even just 8 months ago. So I didn't want to buy a house then, and it was a good idea. So I mean, don't take the advice from this channel. Again, just use the information for your own purpose, to make your own decisions. Joshua Lamont, thank you so much for the 1999. I purchased 29 single-family homes in the last year, 13,000 net income. Should I be concerned somehow future rent for some reason comes down for the first time in history, and I have a problem, or am I retired? I don't know if rents for the first time, are you saying that rents have never come down? Somehow future rent for some reason comes down for the first time in history. I don't know about where you're at, but I mean, I know not every area is the same, but I saw rents come down during the great financial crisis. In fact, a few property owners that I know had to lower their rents during that time. So, I mean, is it possible? Yeah, I think it is possible that rents could come down. I don't really see it happening as of yet, just because there is so much demand for a place to live. And it is going to happen at some point where there's going to be like a moment in which that there's going to be more homes available than there is people out there. And it's probably going to due to a demographics issue as an older population dies off. Harry Dent talks about this quite a bit. And I would assume that time is probably coming fairly soon into the future. But again, these are years. Like, it takes years for this thing to kind of happen. I wouldn't be concerned if you had 29 single-family rentals. I think you're probably doing pretty well. But what would I know? I don't have any family rentals. So, all right. Let's see here. Joshua, thank you again for the 1999. I'm tipsy. You don't have to read that off. All right. Speaking of Harry Dent, what is your opinion with U.S. Treasuries getting a lot of speculation recently? Was it recently for some big names? Yeah, I was reading some of the articles on that, and I'm still like up in the air on how far the U.S. Treasuries are actually going to make it. Now, I know they're trying to push those yields higher, and I know that if they continue to unwind their balance sheet, that there's probably going to be more pressure for those yields to go higher. But again, just kind of like what we were saying earlier about the issuance, like how much out there is there for people to buy? And if there's a demand for it, then the prices are going to continue to go up and the yields are going to go down. I mean, that's if there's a demand for it. If the Federal Reserve is going to unwind their balance sheet into a situation in which there's no demand, then yeah, you would see the yields just go screaming higher. But if the Treasury isn't issuing out Treasuries and there's a demand for Treasuries, then that gives the Federal Reserve the ability to put it in there without raising the interest rates too much. So can you see the yields come down? Well, yeah, maybe. It depends. I mean, how much demand is there for it out there? Obviously there's some, or else you wouldn't see the yields go down. Russia, China, India, Brazil, South Africa, the BRICS nations are teaming up to go against the U.S. What's your thoughts on that, UA? Thanks. Yeah, I mean, it's going to happen. They're establishing. That's what when I say that I'm a strong dollar theorist and that, the dollar isn't going to lose its world reserve currency status, when I say that, I'm just talking about just the short term. Like, I don't mean short term like in a couple of years or months. I'm talking like, short term like maybe 10 longer years or something like that. But the idea that it's going to last forever as a world reserve currency, no, I don't believe that at all. And the idea that the BRICS nations are setting up alternative ways to do a world currency or do world trade without the United States involved, that's happening. I mean, it's going to eventually take place. Now, if you want to prepare for that today, I mean, you're way ahead of the game, like way ahead, and you're going to be waiting a long time for that stuff to come to fruition. I mean, if you want to start participating in that event now, I mean, it's not a bad idea, get in early, but you're going to be waiting a while, a long while. There's going to be, the dollar is going to grow much stronger between now and that event, and it won't last. It's not going to last forever, but it is going to happen. Come on, guys, donate this dude living in a motel. He broke. No, actually, I'm not living in a motel. I'm just actually waiting to get a plane. I should be in Miami right now, but the flight got canceled, or not canceled, but I couldn't make my connecting flight, so they put me up in a hotel room, and I'll fly to Miami tomorrow. So, no, I am not living in a hotel, and I'm not really broke, although I feel like I broke because I was going to make my tax, not that I get into too much personal stuff here. I was going to pay my taxes over the course of a few years because I ended up owing a lot in taxes because I ended up spending my tax money on a down payment for the house, so I didn't have any money to pay my taxes with. But I decided that, I've been able to save up just enough that I think I can pay off my taxes, so I'm just going to go ahead and do it and just be broke. I'd rather have no money and be debt free, for the at least to the IRS than to have the money. So I'm just going to pay it off and be done with it and save up for the next few months again. All right. Wow, so many of you in the comment section. I love it. All right, I have like 500 pieces in my new inbox action figures and about 2,000 comic books in bags and boards. Oh, this is Gus. Yeah. Well, man, you're serious. I mean, you're serious. I mean, I'm not trying to make fun of that or anything like that. I mean, it's just like, to me, like living in your parents' house and like them buying the food and then you're investing in like toys and stuff, like that's not like my kind of thought. But if it's working for you, man, you do that, right? You do that because that's what you figured out that is the way that is working for you. Then I'm not the one to deny that or say that's the wrong way of going about it. You're making it, and I'm proud of that, All right, debt free, baby. Yeah, that's really the only way to be. I look at it. Sometimes I think, man, it would be so nice to drive a nice car, or to just go off and, travel and do vacations and do like, all the stuff. But then you end up like living in debt and you have this debt burden over you and you just never feel like you're ever free. And then the day that you do get out of that debt, man, it's like the world has been just like when you live under a lot of debt, especially if you have like something like credit card debt or student loan debt or something that you just like, it's not doing anything for you. Like, if you have like a mortgage debt, then it doesn't feel so bad. Like you're thinking, well, I'm buying this asset and you got to have a place to live or whatever. But if you're just making a payment to like a credit card or something, that feels horrible. And the day that you get rid of that debt, it feels like the weight of the world is lifted off your shoulders and you walk around with a much better constitution and just feeling better about everything. All of a sudden, like things like waiting in line doesn't feel so frustrating anymore, and you don't really make like the stupid little purchases like buying things that you really don't want, like because you just happen to be at a gas station and it's just like you're buying something to munch on because it just happens to be there. You stop making those kind of purchases and stuff, or I mean at least I did, and I started looking at the world in a much better, not, I wouldn't say better, but well, maybe it is better. You just look at the world in a better way. It's like it doesn't feel so frustrating and overwhelming anymore. So yeah, living debt free is really the only way to go. I mean, even if you don't have a bunch of stuff from it, like I drive old cars because I don't want to make a payment on a new car. I mean, I want a new car, but I don't want to put the money towards it. I'd rather just drive these old cars until they don't work anymore and then go find another old car. jeez, this phone. I don't have a good stand to set it up on. Sorry, guys. I got it on this little stupid plastic cup. All right. Did I just see a super chat? There it is. Dumb Money Media. Thank you very much. I got to tell George about you. Let's see here. If you ever want to be in any of my very terrible videos, hit me up on Twitter. I'll find a good spot for you. All right. Most of them are meme and mining commercials, silver hype vids. Haha. Love you, man. Right on, man. Well, yeah, I'll totally check it out. And I haven't done a whole lot of interviews lately. I've just been so kind of overwhelmed and busy with stuff. And I really want to get into doing interviews. Like, I want to conduct the interviews myself. And I got to figure that out, how it is that I can do these interviews from my car and still have a decent recording from it and stuff. I'm going to work on that. I'm going to try and do some interviews after I get back from the Rebel Capitalist. Maybe get some of the heavy hitters on there. Wouldn't it be cool to have like Peter Schiff or even George Gammon and Doug Casey and Brent Johnson and all those guys, like have those as my first interviews for the channel? That would be really cool. All right. Thank you very much, G3, for the $4.99 super sticker. Very nice of you. Thank you. Thank God I don't listen to Dave Ramsey. I don't mean to talk negatively about Dave Ramsey. The guy is obviously very successful and people give him, a lot of props and stuff. I've listened to him a few times and I kind of get frustrated when I listen to him. It's like, he doesn't, I mean, he has this kind of the same feeling about gold investing that I do, because I don't invest in gold, right? So when you talk to him about investing in gold, he just gets really like, you shouldn't do it. Like, it's a dumb thing. It's a dumb asset and stuff like that. And I have to agree with them if you're investing with gold, because I don't really invest in gold or silver. It's just for that same reason, and people get so mad at me when I say that, you're basically, trying to sell it to the greater fool. And that is not like my saying. That is an investment saying. Like, this is like a common term that is used. Now, it may be insulting sounding, but it's the truth. I mean, at least take it bluntly for what it is. When you buy gold, it's not going to do anything. It's just going to sit there. Yeah, it has all kinds of great qualities and issues that are really beneficial for somebody to buy it. But with the idea that you are going to buy it and then sell it for a higher price later on in the future, that's exactly what you are doing. You're trying to sell it to you bought it for the reason that somebody else is going to pay a higher price for it, right? I mean, that's the greater fool theory. I don't like when somebody says don't buy gold because of that. Buy gold. Definitely buy gold. Buy gold and silver, but buy it for the right reasons. I mean, you can buy it because you want to sell it to somebody for a profit. I buy it because I want to use it as an insurance policy. And that's something I don't think Dave Ramsey ever puts out there for the people to, I mean, I don't know, maybe he does, but I've never heard him say that. So I get frustrated when I hear, a lot of stuff that comes from Dave Ramsey. Although I have to say that he's he's good at what he does. So who am I to say that he's wrong? All right. Gold is money. Everything else is debt. That's exactly right. Gold is money and everything else is debt. That's why I love it for the insurance policy, because everything else is eventually going to fail at some point. Everything is backed by the US dollar, right? Everything is due in US dollars. Well, what if it's due in a worthless currency? Do you really want what it's due in? Then why do you want it, whatever it is? So having gold and silver is the only thing that gets you away from it, right? I don't know how else to say it. And the Fed, absolutely, and the Fed. We do need taxes when why do we need taxes when they can just print money? I'm not going to get into like sovereign citizen or sovereign person or anything like that, but I have to agree with you. Why do they need taxes when they can just print up as much money as they want? Or even yet, like if they could tax 100% of our income and all of corporate profits and it still wouldn't be enough to cover the unfunded liabilities, I don't see the point in taxes either, right? It doesn't make any sense unless they're trying to take your time from you, because that's exactly what it is. It's a slavery form, right? The only thing you have is your time, right? That's it. That's the only thing that you can't get back, and it's the only thing that is not allowed to get any more of. You have your time and that's it. So when somebody steals your money or takes your money from you, they are taking your time. They are taking your life from you. That experience that you had in order to acquire those things gets taken from you. So taxes are just another way of being like a slave. That's really no other way to look at it. Okay. Hey there, big fan. Thank you, Sam. I really appreciate that. Thank you. All right. Thoughts on the construction industry? Yeah, things are tough in the construction industry. You can see just by like, it's not even just my experience as working the retail lumber yard. Um, you can see it with the home builder sentiment right now. I mean, they are not excited about getting these homes built. And the problem really is that they're so difficult to complete. Like you think about the completion of homes right now and the amount that are starting, the amount that starts to the amount that completes, they're like the chart does like this number, right? Well, and now the starts are starting to come down, but the chart did this number, so they could not complete these houses as much as they were starting them. And so if you're a builder and you can't complete the house, then how are you going to profit? Right? That's the question behind it. If you can't, and it's only becoming more difficult with supply chain issues and labor cost issues and everything else that goes into it, why would you want to try and build a home right now if you're going to be less profitable at it and you have to work that much harder? So this is where the home builder sentiment is starting to go to. That's going to be, that's going to be pretty damaging as far as the building industry goes. But again, if you have less inventory coming onto the market, then that's going to start driving prices up. And if prices go up and the supply chain starts to free up like it's starting to do, I mean, lumber's cheaper, but like all the rest of the building materials are still expensive. I mean, doors and windows just went up like another 10% last month. So they're still in very short supply, but you can frame a house pretty cheap, or you're going to be able to frame a house here pretty cheap. But completing it, that's not going to be so easy. So that's going to be pretty hard on the building industry going into the future, at least for some time. Thank you very much, Joshua, for the 1999. And you try to explain how it's possible for rent to come down. Which local did this happen, and where is it today? Okay. It happened during the Great Financial Crisis. And again, like this was, just a handful of people that I was talking to here not here in Portland, but in the Clatsop County area. A few of them they lowered the rents in order to get somebody into the house during that time when everybody was unemployed and there was all this chaos and foreclosures everywhere, and it was just nuts. So that during that time there was a moment, at least here in the county in the county that I lived in, where I saw rents come down. I mean, it wasn't significant, but it was taking place. So would that happen on a national scale? I doubt it, but when you're asking if it could happen, I mean, I've seen it. So yeah, it's possible. Again, it'd probably take another, financial crisis like, they had experienced, and seeing people like getting kicked out of their homes or not being able to make their payments and rents and stuff like that. That doesn't seem very likely right now, considering that there's so many jobs available. People not being able to make their payment doesn't quite seem in the cards as of yet, but times can change quickly. All right. Hey, thank you very much for the $2 there, Dumb Money Media. Tagged you on Twitter. Direct message me whenever. All right, man, I'll take a look at it here after I stop the live stream. I'll go and hit you up. UBI coming. Yeah, I do believe that the universal basic income is going to be coming into the future at some point. Mainly because I don't think they really have a way of stimulating the economy without it. Like, how else are you going to be able to use the excuse to bail out corporations and stimulate the economy with like just willy-nilly handing out money unless you have like a pandemic or something going on? So if that's not the case, then they're just going to have to change the way the system is done. And a modern monetary theory type thing is probably going to end up coming to our future, and using the central bank digital currencies really does seem to be the way that they're going to do it. So, I mean, you can just see all the pieces, they're falling into place, and it's only a matter of time before it happens. All right. FEMA camps, commies, Aaron from the FEMA region. Okay. Yeah, I used to be worried about the mass roundups of people and stuff like that, gonna come and take everybody away and lock everybody up. I don't live in fear. I mean, you can get prepared for that kind of thing, and I don't know, like I had to wonder about the mindset though. Like if I was to live in that kind of constant fear, I don't know if I would be able to progress through life and be successful at it. Um, when I've talked about this a lot of times. When you live in fear, what ends up happening is that you are bringing your energy out to your extremities, okay? And everybody knows that there's energy that's in every one of us. When you walk into a room of people who are very happy, you feel that energy. Same thing if they're sad. When you walk into a room of sad people, you feel the sadness before they even say a word. You know it's happening, right? So this energy exists in every single one of us and we all feel it. Now, when you are living in fear, you are pushing that energy out to your extremities, right? So you're going to put it in your hands and your fists. You're going to be ready to fight, flight, right? This is the point of it, because if you're in fear, you don't know what it is that you have to do, right? So this is where the energy moves to. If you don't live in fear, right? Live in peace. You live in love. You live in happiness, enjoyment, and positivity, right? Well, then that brings that energy to your core, right? It brings it into your center, and then you can be focused, right? At this point, now this energy is positive, and positive things and positive people will start being attracted to that. When you do that, then positive things start happening to your life. But if you live in fear, you're going to have this negative thing happening all the time, and negative things will happen to you. So you can't live in fear. Like, you can be concerned about those things, but don't live in fear, right? I mean, I buy, supplies. I buy canning lids, rings, I buy canning supplies. I buy, rice and beans. I buy these things because you should be concerned about the food shortages that are coming. But if you live in fear, then you are going to have negative things start happening to your life. So you can't live in fear. And that's why I don't fear like FEMA camps, or, I didn't fear the pandemic. I didn't fear anything during that time. Like, I wasn't scared of any of that stuff, because if you live in fear, you're gonna fail, I'm buying fat tanks of gasoline. Yeah. I think that gasoline prices will come down. I think next year you're gonna see gas prices much lower than they are today. I buy rice and beans because it tastes good. Well, yeah, I mean, I agree. Like, I have no problems buying a 50-pound bag of rice. I will eat that. I mean, I eat a lot of rice. Grow your own food. Yeah, that's another way to go about it. Growing your own food, which kind of sucks, guys. I got these ducks. That just made me think. My poor ducks. So I got 5 little ducklings, right? Raising them up. They're doing awesome. One of them disappeared. I think a raccoon got it last night. Those damn raccoons, and they're all locked up. So. Anyway, it's hard growing your own food when the damn raccoons eat it. Okay, let's see here. I believe it would need to be higher than inflation, but inflation isn't 8%. Check shadow stats. Yeah, I don't know what the real rate of inflation is. It's all the numbers to me are completely imaginary as far as that goes. Like, I'm not trying to say like they're 100% fake or something like that, and that you shouldn't follow them. But we already know from the FASB 56 that the government has 2 sets of books, the actual books and then the ones that they present to us. And they say that the ones that they present to us are good for investment purposes and all the things that you would ever need for making a decision about your life, but they can't show you the real numbers for national security reasons. So they already tell us that the numbers that we're seeing are completely imaginary, but they're good numbers to use. Right? So FASB 56 already says to me that whatever it is that we're looking at is completely imaginary anyway. It's up to their, what they want us to see. And if you really want to know what's going on, you really have to be like on the ground like I am. Like, I mean, I'm not trying to say that I have a better view than anybody else, but when my phone rings at work, I know what they're calling for. Like, I'm the first one in line to know if they're looking for contractors, if they're looking for prices, or if it's one of these trucking companies looking to use us or trying to get us to use them to move material around. And I'm thinking, well, if you're a trucking company and you're calling a small-time lumber yard to try and find freight to haul around, that's a very interesting little story right there. And I knew it back. I even said it on my videos. I said trucking's going to start slowing down. You're going to find that this whole trucking issue is going to start slowing down real soon. And it was because I was getting those damn phone calls. I mean, I just knew it. And then sure enough, FreightWave articles start coming out there where the rejection it has to go. I'm not much into trucking. There's probably guys out there who can explain this much better, but there's a rejection rate. So like you have all these orders that truckers can come and just fill, like, it's just like, hey, there's a, like, almost like an Uber driver going and picking up somebody, right? So there's this thing called the rejection rate. So you have like all these like things to ship out there. Well, the rejection rate was really high. Like truckers are like, I am not taking that one. I am only taking the lowest fruit. Well, that rejection rate has dropped dramatically. Like truckers are not rejecting as much as they once were, which leads me to believe that the trucker shortage has probably coming to an end or is not going to get any worse than what it was. So, I mean, it's going to start happening where you're going to start seeing things shipped around the country a lot easier and more efficiently. YouTube truckers are all complaining about rates being starvation wages. Yeah, see, it was a crash. Right? It's a crash. It's going to happen. Anyway, the bullwhip applicable for goods that are tied to raw cost, e.g. copper and wire. Is bullwhip applicable for goods that are tied to raw cost? Well, the bullwhip effect, I mean, yeah, it can happen because it really has to do with the amount of perception for demand. Like the supply chain can't see every single step. So if you're a manufacturer, the only thing that you see are the orders that you get from the wholesalers or the distributors. If you are, hold on, I'm trying to get a call in here. Sorry, Mom, I'll call you in a little bit. My wife's trying to call me, but I'll call her back in a minute. So if you're a manufacturer and the only thing you're going to see is the wholesalers like demand, and the wholesaler, they're only going to see like the distributor's demand, and the distributor, they're going to see how many how much demand they have from the stores. But again, if the store itself has like the situation like I was saying with this rubber fern coat fittings, where the customers came in and were, instead of buying like one or two, they were buying 4 at a time because they were afraid that they were not going to be able to get into the future. Imagine this happening throughout a large scale, people buying all this stuff up thinking that they weren't going to be able to get it. But then even worse, if you were a retailer and you don't have it on your shelf, well then you're going to order more than what you need because the demand is so high. But get this, what if you get allocated? Like they're like, oh, you ordered how many? 10? Well, sorry, you're only going to get 3, right? Sorry, guys, I need a better stand. But say you order 10, but you're only going to get 3. Well, the next time, well, if you're only going to get 3, well, maybe we need to order 30 so that we can get our 10 that we want. And so you see that happening a lot where you have like this over ordering taking place because you're being allocated against, right? Well, the manufacturer, they don't know that. They don't know that this is like a false order because they're being allocated. All they see is like this huge demand for orders coming in. They're like, oh my gosh, what are we going to do? But then by the time that material starts getting in there, like the order cancellations start happening, like, oh, this is way too much. We didn't need that many. We were just over ordering because we were being allocated against. That sort of situation is now taking place right now, and that's going to happen throughout all kinds of parts of the economy. And if it just happens to be a commodity or a manufactured good that has a particular commodity like copper in it, that's not going to matter. It's like that part doesn't really matter to the misconceptions of what was happening throughout the supply chain that caused the bullwhip effect to take place. I mean, it's not like, this is something that has happened many times. I mean, if you go and look at the bullwhip effect and just look it up on the internet, I mean, there's plenty of examples of it happening throughout history, and you're going to see it continue to happen because of just that reason. People get this misconception, and so they start like over ordering or over manufacturing before they realize that this isn't the reality of the situation. And now they come into this reality. Think about it. At some point, I'm predicting it now, at some point, warehouses are going to become very cheap. They're going to get real cheap because there's not going to be any need for them. Right now, they're storing up all kinds of stuff because there's not enough room to put all this massive surplus that's coming into the country. So there's a huge demand for warehouses, but it's false. It's a false demand. And you're going to have the same thing happen again, and then all these warehouses are going to end up like, they're going to be malinvestments, and they're not going to be needed. And then maybe they'll turn them into FEMA camps. All right, thank you so much up there. Where are we at? Joshua, man, you are hooking me up today. Thank you. I am a fan. I love the clouds in the background of your chats. That about building a chicken coop, what percentage of millennials do you think became libertarians, and what effect does this have on the economy? Um, I mean, I'm not saying that young people aren't becoming libertarians. I happen to live in a very liberal area, so I don't really interact with a whole lot of libertarian mindset people. But it's amazing when I start talking to people about the libertarian and the libertarian movement and the freedom movement. I am truly amazed on how many people are very much on board with that idea. So I'm not personally seeing a whole lot of younger generations, a whole lot of the younger generation taking on that libertarian movement, but it is surprising to see the people who are. So it is happening out there, but I don't know if it's actually going to be something that's actually going to be like a movement into the libertarian. Um, I have a feeling because of the idea of like social communism that's growing so big, you're going to have like the offset, like the yin and yang, right? The back and forth pull. So as one extreme starts to happen, the other extreme starts to happen as well. So, and I can see that very well taking place where people are very much against the idea of like a social communist type of environment. They start moving into the libertarian thing, and then you start separating those people out, you know? And then that ends up being kind of like the two parties, right? The Communist Party and the Freedom Party or something, you know? I don't know. I'm just kind of making that up, thinking out loud to the question. But, let's get down here. Walmart grocery warehouse worker here. Warehouse I work at is 71% full as of today. Normally 100% or so. Home office keeps ordering from food vendors and purchase orders are not being fulfilled. Well, the food one I agree with, right? That one you're going to still see in short. But tell me, man, how many TVs are sitting over there at your Walmart? Right? How many TVs are sitting over there? I don't know, plastic totes do you have sitting on your shelf? How many towels are sitting out there? How many of those things are out there? Don't look at the food. The food's going to be in short supply. Look at everything else out there. Look at things that are like luxury items. You're going to start seeing that stuff come down. And you're going to start seeing oversupplies of them. Because just look at the article that I leave down in the description. I mean, Walmart and Target made up 7% of the total imports coming into this country. Holy moly, 7%. Like, I think about all the crap that comes into this country, and Walmart and Target made up 7% of that. I mean, that's incredible to think. How much oversupply do these guys have? It's probably huge. Yeah. All right, let's see here. Oops. Why do you think most analysis have a hard time differentiating between shortages and inflation? Well, okay. If I had not been in the lumber industry, then I probably very much would have been on board with the money printer go burr inflation scenario. But I was watching lumber. I mean, I was so hyper focused on lumber that when people started saying, "Oh, look, money printer go burr and lumber go up," bam, that's all you need, man. That's what happened. Why are you trying to explain it any other way? And I'm like, dang. It was so frustrating because I had put out so many videos talking about the mill curtailments and inventory depletions and the shutdowns and just everything that was leading up to the pandemic. And then boom, we get these stimulus checks during an inventory wipeout, wipes out the rest of the inventory, right? And then all of a sudden lumber prices are shooting up and people are like, "Oh, it was the money printer that did it." And I'm like, well, what about all the mill curtailments? What about all the mill shutdowns? What about all the inventory depletions that were happening? The whole supply chain was in shambles. Then the pandemic hit. And people want to say, well, it was the money printer that caused the lumber prices to go up. And I'm like, pulling my hair out trying to say, no, man, just look at it just a little differently. Just take the money printer out of it for a second, then look at all the reasons that caused lumber prices to go up and down. Then you can put the money printer back in there and say, okay, this is what the Fed did, right? Yeah, the money printer go burr does cause inflation to happen. There's no doubt about it. I mean, you can't do it without an excess money supply. That's the reason for it. But there is a lot of other reasons why inflation would happen. And mainly, it was the severing of the supply chain. I said it back then, and I will still say it today. The severing of the supply chain cut the flow of goods going into this country. Demand went up on stimulus checks. Everything got wiped out. Prices go up. Okay? But now here we are. The inflation has like it's not like the Federal Reserve has pulled in a whole bunch of money saying, okay, well, here we got all this money back in there. See, the lumber prices are back at 500. See, I asked it back then. I said, okay, what are all the people who are using lumber at 1,700 per thousand as the inflationary scenario caused by the Federal Reserve? What are you going to use for an excuse when it's at 500 per thousand again? All right, I said it then because I knew that it was going to. I didn't think it was going to go all the way back down to 500. I mean, I knew it was going to go back to 500, but I didn't think it was actually going to go all the way down to 500. I mean, it hit 550, so I mean that was pretty close. But that's what I said. I mean, I was like, what are you going to use for an excuse when it's back down into the 500-600 per thousand again, and the money printing, or all the money is still in the system? Okay? It's because it's not necessarily the money printer go burr that causes inflation. There's a lot of other things that happen. And mainly, like I said, it was the severing of the supply chain that did it. Now that the supply is coming back into I mean, it's going to take a while, but the flow of goods is going to start flowing through the country again. And when that happens, you're going to start seeing price stabilities. This bullwhip effect is going to find its equilibrium. Is it going to be higher than it was? Yeah. Is it going to be the hyperinflation scenario that people are expecting? I doubt it. I have a feeling that we are going to be going into a deflationary scenario with all this surplus coming in, and then we're going to go into the real shortages because there's nobody going to be manufacturing if nobody's going to be ordering anything because we have a surplus of goods. So the real shortages have yet to come. I mean, you think that was bad? You ain't seen nothing yet. Oh man, we're still going here, Joshua. Man, you're just like hooking me up, man. I really appreciate your thoughts, so thanks. I'm new to YouTube and this super chat stuff, but keep giving us your opinion. I'm able to use it as a conversation against my opinion internally. Works well. Well, perfect, man. That's what this channel was for. I mean, I started this channel to start a conversation. I mean, that was the whole point of it. I said it from the very beginning. I wasn't trying to give investment advice. I mean, I tell you what I do, and I'm trying to, have this conversation about what's going on in the economy so we can all figure out what it is that we need to do with our lives to make the best decisions. And man, that's it right there. What you're saying is exactly why that's why I do this channel, is for that. All right. Thank you very much, Taylor Stanley, for the $10. Glad I caught your live stream. 1 to 2 streams ago, I heard you mention how low Coinbase is. Thought I'd mention Robinhood and FTX CEO investing almost $1 billion in the company. Check it out. That's my play. Really? Now, I do have to check that out because I have invested a little bit of money into Coinbase just to have a little bit of skin in the game. And of course, their stock dropped dramatically. But that's the time in which that you see big moves take place, and that's it right there. So I'm going to go check that out. Robinhood and FTX CEO investing almost $1 billion into that company. I really feel that Coinbase is going to be the leading company for doing like the payment systems for cryptocurrencies. So like if you go to check out, you'll have like, use your Visa card, use PayPal, use Coinbase. Like I could really see that being like a tab that is on all online transactions. I could really see something like that happening in the future. And so investing within Coinbase, I mean, I'm going to do it. I'm going to do more. I'm not going to throw, the kitchen sink at it or anything like that, but I will, dollar cost average $50 every couple of weeks or something until I have what I feel is a decent amount in the portfolio. And again, that's not investment advice. You guys make your own decisions. Do your own research. Propane is the best fuel, good forever. Yeah, I have a few propane. I have, right now I have 2 20-gallon, or not 20-gallon, 5-gallon propane bottles at the house. But I would like to have a few more just to have on hand. I figured that if you have the propane, then you can always cook. Because I got all kinds of barbecues. I got charcoal barbecues, propane barbecues. I like to barbecue. I like to grill. So yeah, I don't have any problems like cooking. Power goes out, no problem for me. All right. Nice response. Oh, thank you, man. Why do we need more workers? Less workers is good for wages. Why do we need more workers? Who says we need more workers? I think we need, we need more workers to fill the amount of jobs that we have out there, but there's so many damn zombie corporations that the Federal Reserve is going to about ready to take out with the higher interest rates. I don't see why we need to actually have more workers. We just need to take out the zombie companies. And we don't need to. Let me back that up. We don't need to do anything, right? The Federal Reserve is going to try and take out the jobs market by knocking out them zombie corporations, right? What they're going to do is by lifting the interest rates, at least pushing them up on the 10-year Treasury, like, hey, we're going to lift interest rates another 300% or whatever. No, we're going to lift the interest rates another 3/4 point, maybe even more going into the future. Market perception, oh man, 10-year Treasury starts going up, right? Because they're like worried about the higher interest rates or coming into the future, so they're going to demand higher payments for their bonds. Yields go up. When those yields go up, they get ever closer to the corporation's yields, right? When they start getting to those corporate yields, investment into corporations isn't nearly as prevalent as it would be going into the Treasuries, considering that the Treasuries are the safe asset and corporations are taking on risk. So if people are not going to get into the corporations as easily as they get into the Treasuries, these corporations can't roll their old debt into new debt. All of a sudden, they can't make their payments. They start selling off assets. If they're zombie corporations, they start failing. They take the jobs with them. Those jobs go over to the people who are viable companies. Now, back during the pandemic, when they set up the special purpose vehicle, they had that corporate debt lending facility. They loaded it up with hundreds of billions of dollars, bought a little bit of corporate debt, then put out the word out there that everybody was going to be buying corporate debt, or that they were going to be buying corporate debt. Everybody starts running into the corporate debt, trying to front run the Federal Reserve. Fed didn't really buy anything, but they loaded up on this corporate debt. All these investors did. Now these corporations are sitting on a bunch of cash. Now I have to think about that. These corporations are cash heavy. If you are a viable company, not a zombie corporation, but a real company that can make it, and you're sitting on a lot of cash, well, then you can go into a downturn. You can go into a economic slowdown because you have the cash to make your payments. So you're not going to go into a defaulting scenario if you can't make your payments if you're sitting on a bunch of cash. Cash that you got really cheap during the pandemic that was forced by the Federal Reserve by setting up that special purpose vehicle. I really think that the Federal Reserve is going to try and go on a zombie hunt, and they're going to take out these zombie corporations. And when they do, they're going to take out the jobs with it. And those people who lose their job are going to go find them at the viable corporations until unemployment goes up. And then that'll stop the inflation. The Federal Reserve, like a lot of people argue about the Phillips Curve, saying that it's not a legitimate way of actually, trying to combat inflation. The Phillips Curve is like basically the idea of the Phillips Curve is that if you have more business, more money, more employment going into the economy, these higher employment causes the wages to go up. The wages start causing people to go out there and start spending more money. That spending of more money gets the inflation going. Okay, so that's kind of like the idea of the Phillips Curve, and a lot of people dispute it, saying it doesn't exist. Okay, that's fine. The Federal Reserve does believe it exists, and they use it. So you can argue about it all you want. It doesn't matter. We're not the ones who are in charge of the monetary supply. The Federal Reserve is. So, if you believe it or not, it doesn't really matter. You have to look at what the Fed is looking at if you want to understand or predict what the Federal Reserve is going to do. So that's why I feel that the Federal Reserve is going to go on a zombie hunt, is because they very much feel that the Phillips Curve is very much in play, and they want to start hacking out those zombies so they can get those people to go to work for the viable companies. And then wages will stop going up because there won't be a bunch of excess jobs from zombies who are taking out ever increasing amounts of cheap debt. That won't happen anymore. Anyway, assumes a zero-sum game and it doesn't work like that. I get it. Okay. Anyway, let's move on. Taylor, thank you for the $10. I think it's a waste of talent that you don't express your knowledge into the markets. You have the most valuable things in the market: knowledge, time, and incredibly good instincts. Thank you. I don't think I'm wasting my time or talent. I think I'm doing exactly what it is that I'm supposed to be doing. I'm heading down to the Rebel Capitalist event. I may end up on stage speaking. I'm building my knowledge. I'm building my platform here. I think I'm doing what I'm supposed to do. And there might be other levels of achievement that I need to step into. And at some point I may find myself there, but right now I feel that I am progressing and moving forward with this, with what I'm doing here, you know. What are your thoughts on the housing market? Will it adjust? Yeah, I mean, I do, but I am. What makes sense and what happens isn't you know, those are two different things, right? So, I mean, I would never have thought by purchasing the house that I did at the time that I did that I would see the thing move up another 20% in 8 months like that. I mean, had I thought that was going to happen, I would have had no problem getting into my house, but I didn't think that was going to happen. Like, I didn't see that. But yet, that's what happened. So, I mean, is the housing market going to adjust? Yeah. Like, what happened, even in my case, is so unrealistic. Like, it should never have occurred like that. And so I'm sitting there going, wow, that's quite amazing, but I don't like it. Like, that doesn't feel good to me to see it move up like that. It seems very unrealistic, and I don't like looking at things that seem unrealistic. It seems like that's probably not gonna last. And are we gonna see it come down? Yeah, I would imagine we will. Like, especially on my house, when I saw that move, it was just like, that's not right. That's not going to be. If it goes back down to what I had paid for it, that would seem probably like a more realistic price now that it's up way high like it is. But even if it dropped below the price that I had paid for it, even that would seem more realistic for the you know, just for my area. It, like, the prices just seem so elevated. Like, even just talking to the people and everything, like, no, I don't feel that it's going to, like, stay elevated. I feel like it'll adjust down, but I've been wrong on it so many times. I can't make that call anymore, you know, because nothing makes sense when it comes to that housing market. I mean, you know, really, the forbearance screwed everything up. I mean, they really should have let everybody fail. And, you know, it sucks because we had this pandemic and you couldn't let people do that, right? I mean, so you keep everybody in their house, but even worse, you tell everybody that they don't have to make their payment. So you don't know who it is that would have foreclosed on you or not, like, or who would have been foreclosed or not, because you didn't have to make your payment. So that's pretty cool. And then house prices go up. So not only did you not have to make your payment, but then the thing doesn't go underwater either. So even if you go out of forbearance and you're like, oh man, I can't really make the back payments and I really can't even make future payments because I really didn't do anything as far as, like, you know, setting myself up to be able to have a job or, you know, take care of business. I just kind of went off and played or whatever. Even if you screwed off, you could sell your house for a profit. Like, why would you get foreclosed on when you can just sell the thing, right? And then even profit from it. So, like, the wave of foreclosures, I don't see it happening. Like, I mean, I was expecting them, but then when everybody refinanced their homes or just sold the home, why would you foreclose on it? That doesn't make any sense. Will the foreclosures come? Like, will we have, like, massive unemployment coming into the future and people won't be able to make their payments on their homes? Well, then that scenario could still come. I mean, that's a possibility. But there's so many damn jobs out there right now. Do you see it happening? Like, I mean, is it likely that people are like, man, I just couldn't find a job and I can't make my payments on my house anymore? Well, damn, there's jobs everywhere right now. Will that be forever? No, I don't think so. Like, I think they're going to take the zombie corporations out, and that's going to cause some unemployment. Those people are going to move into the other jobs, and then the unemployment will start to rise, and we may have issues then. I don't know. Like, by that time, we may be heading into another recession, and then they'll be like, oh, hey, guess what? UBI for everybody, and nobody will get kicked out of their house. So, anyway, me just babbling along again. All right, Jose. Thank you very much for the $1.99. Enjoy Miami. Have some Cuban food. You know, I think I will. I don't know if I've ever really enjoyed Cuban food before, so that might be a treat to try and get while I'm down there in Miami. LA sucks. Alrighty, guys. I'm going to have to go because it is going to get late and I have to be up very early. Taylor, thank you for the $5. What's your opinion on waves of defaults in subprime car loans? Yeah, and now that's something that we have talked about just a little bit. it turns out there are quite a few people during that pandemic when they got those stimulus checks ran out there and bought those expensive cars. Well, they are too much car for them to handle, and you're starting to see where I think it was the article we were talking about was like the millennial generation and a little bit younger. Those ones are starting to suffer with the idea of having too high of a car payment, especially when you have a high car payment and then all of a sudden the gas prices just go through the roof. So now you're making a high car payment on something you don't even get to drive because you can't afford the gas with it. If you can't sell that car off and you just don't want it anymore and you're young, you might just say, you know what, I'm not making my payments anymore. I'm done with this thing. You can have it back, right? And we may find a wave of foreclosures coming with that, especially if you keep seeing the gas prices stay elevated like they are. Like I said, why would you buy a brand new car, make the payments on it, pay the high insurance payment on it, and then not be able to drive it because you can't afford the gas? That doesn't sound like much fun to me. So, all right, guys, I'm gonna go. I'm gonna go to bed. I'm gonna take off for Miami in the morning. I'll try and do another video tomorrow if I can. This was a lot of fun hanging out here in the hotel room with you guys. Thank you everybody who sent me a super chat, like Steve just now with the $20. So I guess I got one more question to answer. Thanks to Mrs. Economist for letting us talk macro with UE. At UE, I am not a libertarian, but you are real. Thank you. Thank you for your perspectives. Well, Steve, thank you very much for the $20 super chat, and thank you very much for being here and commenting, and thank you everybody for hanging out with me for the live stream. And we have 760 of you guys watching right now. At one point I saw it up close to 800. 726 likes. You guys are awesome. Thank you so much for being here. Uneducated Economist. You guys let me know.